We have more movers for you. Diane King Hall here with me, host of Morning Movers, and looking at some of the stocks. Trade Desk first up as we're in the thick of earnings, and some of your thoughts there.
Yeah, look, it was a beat on the top and bottom line for the Trade Desk. It's certainly a win that it needed given how the shares have performed year to date. So you're seeing shares rally more than 20%, 23% at the moment. Keep in mind, shares had been off by more than 40% before today's move. In terms of adjusted EPS, it reported 33 cents a share. She was looking for 25 cents a share, so that was a big beat there. Revenue is $616 million for the trailing quarter. That also beat expectations. The expectation was $574.3 million. So revenue is up 25% on a year-over-year basis. And then in terms of guidance for the second quarter, they're guiding for revenue of at least $682 million. They did highlight some economic volatility, but they say that 2025 is a critical year for marketers who are leveraging the open internet and just amid growing demand for differentiated digital strategies. In terms of the momentum, analysts are now looking to seeing some strong execution and market share gains that they've made after they had weakness at the end of the fourth quarter. They have some tailwinds that could be helpful for them in terms of the regulatory front. That recent court ruling against Google's ad monopoly could potentially reshape the digital ad landscape, and that could certainly be a tailwind for the trade risk. And even the potential breakup of Google's ad tech business could enhance the Trade Desk positioning when you think about open web advertising. In terms of a couple of the analysts' takeaways that we're seeing here, JMP is reiterating their outperform rating, but they have cut their target, Nicole, to $100 a share from $115 a share.
I mean, it's nice to see the revenue surging for a company like this. It's nice to see some up arrows. I mean, this up arrow is 22% higher.
Yeah.
I mean, that's a big move.
A huge move.
Right? I mean, and even some of these names, we haven't seen sometimes in prior earnings season, we'll see these dramatic moves. Last earnings season, we were seeing it felt like 20% every day. Yeah. We haven't really seen that much this round.
So this is a big move, and it just shows that, they did better this most recent quarter, especially, again, given the weakness that the Trade Desk had in the fourth quarter. And again, just to reiterate, the tailwinds that they have potentially with regard to Google and Google's, look, keep in mind, obviously, as we know, that Google is essentially the Goliath when it comes to the ad and the search business there. So there's the potential for the Trade Desk to gain more market share there. Citi is boosting their price target on the Trade Desk to $82 a share from $63. So again, that suggests some more upside from here. KeyBank boosting its price target to $80 a share from $67. They are maintaining an overweight rating, so they are certainly constructive on the Trade Desk.
All right. Now, I mean, really, the earnings movers have also been good this week, right? We had 2 days of losses, but that was after 9 days of gains, and now we're on our third day of gain again. So, I mean, I don't know the math, but 12 of 14 days or something like that we have up arrows. And part of it is good news on trade deals, but also some of these earnings.
Yes.
You're getting to Lyft now, which also has a nice move today.
It does, yeah. Look, and Lyft certainly needed a win, especially when you compare it to how Uber has performed year to date, and it's also helping, you're seeing Uber have a little bit of a sympathy move here to the gains that we're seeing in Lyft. But Lyft shares rallying now double digits as well off the back of their latest quarterly numbers. They posted a profit. It was a penny a share, but the street was expecting a loss. Revenue $1.45 billion. That was a little bit light, but look, they have some confidence clearly in the road forward because they're boosting their share buyback program. They're boosting that to $750 million. Again, that shows that they have confidence to be able to achieve that. And just the fact that they are profitable here. They guided for gross bookings in the second quarter to come in between 4.41 and just above 4.5 billion. Midpoint of that slightly above what Wall Street is looking for, and their most recent quarter gross bookings had come in at 4.16 billion, and that was above expectations. So they've got a couple things coming out very well for them. Lyft is doing well in terms of rideshare, seeing the bookings there. We know that that's their focus. They don't have the same bench that Uber has with Uber Eats, et cetera. Lyft clearly leaning into, they're more narrowly focused to ride sharing, but they did well in this most recent quarter, and the shares right now rallying 19%, Nicole.
And when you have an activist investor finally laying off That's good news too. You had activist investors pulling, trying to have board nominations, but after engaging with leadership, Engine Capital withdrew its nomination for a couple of candidates to the board of directors, basically showing confidence, right?
Yeah.
After I met with the leader, I decided I'm going to take a step back. So they thought the conversations were productive, and they saw that the company was committed to significant share repurchases in the coming quarters. And so the steps being taken there,
Absolutely.
They like that. And I think that too could help give a stock an up arrow. It means less uncertainty.
It's true, or less pressure on it. And I mean, look, other things at its back. Oppenheimer are boosting their price target to $17 a share. They maintain an outperform rating. Barclays raising their price target to $20 a share. Now they are more neutral. They're maintaining their equal weight rating on Lyft.
Okay.
But still, shares rallying big.
And last but not least, we look at Pinterest, double digits here, up, let's see. Pinterest is up about 11%, I think.
I got all the winners today.
Winner,
yes,
chicken dinner.
exactly. So in terms of how Pinterest performed, it was actually mixed results, but the street likes the growth that they see on monthly active users, and they did beat on revenue. Adjusted EPS came in at 23 cents a share. The street was looking for 25 cents. Revenue, $854.99 million. Street was looking for 845.74 million. Monthly active users, 570 million. So you have strength there. You saw growth, whether we're talking about the U.S., Europe, or the rest of the world. Rest of the world was actually bigger growth. You had double-digit growth there in terms of users, up 14%. Europe, you saw growth of 5%. U.S. and Canada, growth of 4%. So overall, they're growing. The CEO said Pinterest is more resilient than ever amid this changing ad landscape. He highlighted some AI enhancements that helps just make the platform more attractive. So it's neat to see that you're seeing that growth there, and especially when you think about how social media companies have performed this year. This now takes year to date Pinterest positive for the year.
Yeah, and it's interesting because don't forget Snap said they were not going to provide second quarter guidance at all. There were some concerns on Snap, for example, as Meta and Google were benefiting from ad spend. So I think there were people that, and Pinterest is not Snap, but I think there were people just sort of putting that in the back of their minds, so maybe they didn't expect an 11% move today, so that's good news.
Absolutely good news. And look, the CEO also saying that this year they've turned this from a company that was dealing with modest revenue growth into a secular share taker. This is a quote, with a more resilient business than ever. Now look, the head of finance did point out they're not immune to the macro environment, so they did give some caveats around this, but still, obviously, we're seeing a big old thumbs up right now in terms of share reaction.
All right, Diane King Hall, great to see you. She had all the winners today. Appreciate it. Thanks, Diane.